Hey there guys, and welcome back to Alex Invest. As we can see, the markets were red today, and there's a few reasons behind that, but the main one I think is sort of these YOLO stocks that we're seeing on these Reddit forums like Wall Street Bets and also like StockTwits. We're seeing these threads basically hype up and promote buying these stocks, which are generally bad companies and bad stocks to buy, but because they have such a high short interest on them, these threads are getting people to buy these hype stocks and essentially push up the price so that all the short sellers in the market exit their positions and then again shoot up the stock price even higher. And there's a few interesting things to note about that, and that's what we're going to go through today here. We're going to look at sort of some of the bad things about this, but also some of the good things about this, sort of what it means for the future of the market and in a longer term here, right? And kind of how sustainable this is. And so this is just going to be a video where I'm going to talk to you guys about sort of some of the things I'm seeing and what I kind of think here. So let's get into it. So this all started with GameStop. That's the ticker symbol GME. And essentially what happened is the price ran up dramatically, and all the short sellers, or a lot of the short sellers, exited the market, but actually brought new short sellers along with them too. So there is still a high short interest on the stock, and we may, if we see the stock price sort of continue at where it's going now, see that more short sellers are going to exit the market and push the price even higher. Since this happened with GME, there's been hype around doing it again with some other stocks on these threads, and it's kind of gone away from just the threads and just people talking about this hype too and wanting to get in on the next big opportunity here that this is going to happen to. And there's a few out there. AMC is one of them, Palantir is another one, and EXPR as well, which ran up over 200% today. Now I'm currently only invested in AMC because I think this will be the next kind of YOLO stock to pick up heavily, but we never really know what's going to happen, and that's why this is risky to do. And it is kind of this YOLO, like people say, right? And that's why it's not a sure thing. And you know, in the stock market, nothing is ever a sure thing, and that's where the risk comes in, and that's why you can make so much money on the stock market, because you're taking on that risk of losing that money as well. So the first thing I wanted to mention is something good that's happening with this, and we can kind of look at this in the same way as we see short sellers having a good impact on the market, right? When a stock gets run up too high on hype and unfounded news, then a short seller will come in and short the stock and then put out a report basically of why the stock doesn't deserve to be that price, right? And generally that's a good thing, because we don't want the price of a stock to go up too high when there's no news on it and there's no justification for a stock being so high, right? And now we're seeing the exact same thing in this scenario, but the exact reversal of it, right? Because in the last scenario, it's the investors who are getting greedy and buying all these shares even when the price has already been run up so much, right? And it keeps pushing the price higher up until one of these short sellers says, no, this shouldn't be this high, right? And we saw that with Nikola, for example. And now we're seeing short sellers getting very greedy here in some of these stocks, for example, GameStop. And you know, the stock, and there's many out there, has a very high short interest. And so now retail investors and other investors are stepping in and saying, whoa, no, we shouldn't have this much of the company be shorted because it doesn't deserve to be shorted this much, right? And that's the exact reversal of basically what short sellers do for the market. Where before, investors buying stocks and call options, etc., were being sort of taken down and calmed down by short sellers, now it's the investors and the ones buying stocks and call options who are sort of taking down and calming down the short sellers in the market, right? So we get back to an equilibrium here, which is very important, I think. And that's one of the big good things that is coming from this, I think, because before this, there was no real competition against the short sellers when they're shorting a stock like GameStop. And you know, this isn't the first time that we've seen something like this. Back in the early 2000s, we saw something similar where in AOL chat rooms and things like this, there was posts about pushing stock prices up because of euphoria and because investors saw that there was such a high short interest on these stocks. It does happen every once in a while in the market, and it can be good for the market sort of to settle it down a bit again, because as we know, we've seen absolutely insane gains lately in the market, and this is because of stimulus partially and all this, but it's also because of the euphoria of the stock market and these 20 million plus new investors joining the market in 2020, right? And so this is kind of the market's way of saying things need to calm down a bit again. And we can kind of see that from our red day today again as well. But anyways, back in the 2000s, eventually there was a price to pay, and the markets had a downtrend for multiple years after that. Many people lost a lot of money. Some people made a bit of money, but again, with the stock market sort of in a downtrend for the next few years, a lot of the potential gains that could have been made had something like this not happened were basically taken completely out of the market. So you have to sort of weigh those two scenarios there and kind of decide which would be the better outcome. Now, I'm not saying this is going to happen soon, and I'm not saying this is going to happen soon with AMC or anything, but I'm saying eventually in the longer term, this is something that we need to watch out for. And we can already see some of this price that eventually we're going to have to pay in sort of the markets today, right? If we take a look at the SPY, for example, here, we can see we came down from right on the 27th, heavily down, right? And we sort of kept going on the day in a downward trend and a downward momentum here. And we can see the same kind of thing with the S&P TSX composite here, right? Big drop down, and then sort of we continued the day a little bit flat, but ended lower as well. And if we take a look at my watch list, right, we can see the same thing in most of my stocks here and my portfolio, because what happens here is people are exiting their positions in the stocks which they believe in and which they think are going to grow, and companies which are going to grow, right? And put that money into these YOLO stocks and WSB thread stocks because they think they're going to be able to make a quick profit on it. And you can, and we can see that, right? Even with AMC here, which I bought yesterday for the first time and picked up some more this morning, but we can see, we went up 300% today. And it's these kind of gains that people are looking for short term here, right? And that's all good, but it's having a pretty negative effect on the rest of the stock market and stocks which should be doing well because they are growing and they are advancing, and not stocks which are, close to going bankrupt and things like that. And they do have a reason behind being shorted, but I agree that they shouldn't be shorted as much as they were. And that's where us as investors have now kind of stepped in to change that, right? But, what's clear when we're doing this is that it has a negative effect on the market. And that's really what's important here. And, buying hype stocks and bad companies, it can make you a quick profit, but at the end of the day, this is only going to continue up until it ends. So the question really becomes, when will this end, and is it going to end, right? And I think I can say with decent confidence that yes, we are going to see an end to this, just like we saw in 2000s. There was an end to that, and it happened before that again as well. Because what happens is this is going to work up until the hype kind of dies down on a stock. We see a big pullback, and people are losing money, and then all of a sudden they're exiting their positions in these stocks and they're going back into their regular stocks. But since some investors are going to get hurt by this, generally there's some investors that exit the market completely and don't rejoin, and that's why we might see a continued downtrend here in the entire market. Although I think because of sort of the stimulus and everything, we are going to stay up, and the market in general is going to keep moving up even after the hype from these few companies dies down, right? And again, like I said, it all started with GME, right? And on that one, we still saw the market doing well because there wasn't as much insane hype on it. But now that GME kind of proved the concept of this whole short squeeze idea that Wall Street Bets is pushing, it kind of made a lot of other investors who would not have generally bought GME, for example, enter the market here for these hype YOLO stocks. And this kind of brings us into our next point about hedge funds and shorters versus the retail investor and investors who are buying these stocks. There's been sort of this competition between these two forever, but lately it's been extreme because sort of these hedge funds with their short positions are being squeezed out of the market here for these stocks. And it really comes down to who has deeper pockets and also who has connections here. It kind of seems that everyone here is going against pushing the price of these stocks high. And, in a way I understand, because in the market, we don't really want companies who are failing and have poor revenues and financials to have huge prices on their stocks because they're not worth that price. But, on the other hand, I do understand, because with such a high short interest, something has to happen, and you can't just let the shorts always win, just like the shorts can't let the investors always win and have the price of a stock continue rising up. So, there's kind of two sides to this story, in my opinion. But what's interesting is it seems like the market as a whole, and especially obviously the hedge funds with the short positions, are doing everything in their power to keep these prices down. The other thing, of course, is to note sort of the insane buying and the insane selling going on today through volume. And a lot of this was likely just the regular investor buying and selling because they wanted to take some profits. But I think a part of it as well is some of these hedge funds, we know a lot of these bigger banks and hedge funds have manipulated the market before. They've gotten caught for it and they've had to pay for it. So it wouldn't surprise me if the same thing was going on here. But again, that's all short-term noise. When we're looking at the stock market in a longer term here, I don't think it's going to be good for the market as a whole. And because of that, it's not going to be good for us as retail investors either. And the reason is, again, like I said before, this is going to hurt a lot of people, and there's some people who are going to lose a lot of money here and exit the market, and that euphoria of the stock market with these 20 million new investors joining isn't going to be there anymore like it was sort of over the past few months here. And you really have to weigh between making a few dollars or more than that, or having the market sort of continue on an uptrend for the next few years. And I'm not saying this will happen. I think we could, again, like I said, with stimulus, see the market continue its euphoric rise, but it's definitely something to look out for. So if you're investing in these hype stocks, or you're thinking about investing in these hype stocks, know that you should have a strategy and have sort of a price target of where you're going to pull out of your position, and make sure that you're not investing with emotions, but investing because of facts. And don't just get greedy and think that the price is going to continue up and up and up, because that's when you're going to get hurt. And other than that, I hope you guys have a fantastic day, and I'll see you guys tomorrow.